Part 1. Why is money flooding into AI stocks?
In the previous videos, we explored GPUs, data centers, electricity demand, and even water usage.
Yeah, AI started to look less like software and more like a giant industrial infrastructure system.
This time, we are going to look at how all of that is being reflected in financial markets.
So, basically, why have AI and semiconductor stocks exploded so dramatically?
One important thing to understand is that the current AI rally cannot be explained by hype alone.
But honestly, it still looks pretty bubble-like. Nvidia's rise has been insane.
That is a very common concern, but there is also a major difference between today's AI boom and the dot-com bubble era.
What is different?
Today, big tech companies are already spending enormous amounts of real money. Reuters reported that Microsoft, Amazon, Google, and Meta are expected to invest roughly $650 billion into AI infrastructure in 2026.
$650 billion. That sounds less like corporate spending and more like a national infrastructure project.
Exactly. And the AI ecosystem is currently constrained by shortages everywhere: GPUs, HBM memory, data centers, electricity, and cooling infrastructure.
So markets are focusing less on AI apps and more on the infrastructure required to run AI.
That is one of the biggest characteristics of this cycle. Past tech booms were mainly about increasing users, but now the bottleneck is physical infrastructure itself.
That explains why investors are suddenly buying not only semiconductors, but also power and cooling companies.
What is really interesting is how capital flows are widening. At first, the market looked almost entirely focused on Nvidia, but now investment is spreading into HBM memory, networking, cooling, and power infrastructure.
Why is the market expanding into all those areas?
Because AI systems cannot function with GPUs alone. Modern AI servers require extremely fast data movement between processors and memory.
That is where HBM comes in.
Exactly. Some analysts now argue that the biggest bottleneck is not GPU supply anymore. It is HBM supply. Reuters reported that SK Hynix has surged because of massive demand for AI-focused HBM memory.
So, in the AI era, performance is not only about computation power anymore, it is also about how fast data can move.
Exactly. And then there is TSMC.
Right. Nvidia can design chips, but if TSMC cannot manufacture them, nothing ships.
That is why advanced packaging technologies like CoWoS, HBM stacking, and high-density packaging have become strategically important. The market is no longer rewarding only smaller transistors. It is rewarding companies that can mass-produce AI-optimized infrastructure.
Honestly, this does not feel like AI stocks anymore. It feels like investors are funding the construction of a new industrial system.
That is actually very close to reality. TSMC itself expects AI and HPC to become the core of the semiconductor market by 2030.
So the market is increasingly betting that AI is not just a temporary trend, but a structural transformation of the global economy.
Exactly. But of course, that also introduces major risks.
Yeah. After hearing all this, the next question becomes, can this really continue, or does it eventually collapse? Part 2. Is this an AI bubble?
At this point, it is clear that enormous amounts of money are actually flowing into AI infrastructure.
But the big question still remains, is this truly an AI revolution, or just another bubble?
That is probably the single biggest debate in the market right now.
Honestly, when I look at Nvidia's valuation, part of me thinks, this has to be overheating.
The reason bubble concerns exist is pretty obvious. Semiconductor stocks have risen at an extraordinary pace. Reuters reported that semiconductor stocks account for a massive portion of the recent gains in the S&P 500.
So the broader US stock market is increasingly dependent on AI-related companies.
Very much so. And it is no longer just Nvidia. Companies like SK Hynix, Micron, Broadcom, and AMD have all surged dramatically too.
Doesn't that become dangerous though? When anything related to AI gets bought, that feels a little unhealthy.
A lot of investors are worried about exactly that. MarketWatch recently discussed signs that parts of the AI trade may be overheating.
That is what bubbles usually look like, when people start assuming prices only go up.
Exactly. And geopolitical risks matter too, especially US-China semiconductor restrictions. But despite those concerns, the market still remains extremely bullish. One major reason is simple. Critical AI infrastructure is still genuinely scarce.
So it is not just dreams anymore. There are actual shortages.
Exactly. Especially HBM memory. Recently, some analysts have argued that HBM supply constraints matter even more than GPU supply constraints. Reuters reported that the AI boom is creating severe memory shortages across the industry.
A few years ago, nobody outside the semiconductor world even talked about HBM. Now, it is suddenly one of the hottest topics in finance.
That is one of the fascinating structural shifts happening right now. In older computing eras, the focus was mostly how much computation can you perform. Now the question is increasingly, how fast can you move data?
That is why SK Hynix suddenly became one of the most important companies in the AI supply chain.
Exactly, and the same thing is happening with advanced packaging. CoWoS capacity shortages at TSMC have become one of the industry's biggest bottlenecks.
So, the AI race is not only about designing smarter chips anymore. It is also about who can physically manufacture and package them at scale.
Exactly. That is why the market increasingly looks less like an AI software rally and more like a race to build AI infrastructure.
Which explains why power systems, cooling, networking, and manufacturing companies are all participating in the rally too.
Right, because modern AI requires computation, memory, networking, electricity, cooling, and manufacturing capacity all at the same time.
So, even if parts of the market are overheated, the broader industrial transformation might still be real.
That is probably the most balanced way to think about it right now.
Part 3. Where will the money flow next?
At this point, the AI rally is clearly no longer just about NVIDIA.
Yeah, the deeper we go, the more it feels like the market is rebuilding an entire industrial ecosystem around AI.
And that is why the next big question becomes, where does the next wave of money go?
Because if everyone already knows NVIDIA, investors start searching for the next bottleneck.
One of the biggest shifts happening now is that investors are moving beyond pure GPU exposure.
Meaning the market is starting to focus on the infrastructure surrounding AI.
Exactly. And the clearest example is HBM memory. AI accelerators need massive bandwidth to feed data into GPUs fast enough. Without HBM, modern AI systems simply cannot perform efficiently.
So GPUs became powerful enough that memory speed itself turned into the bottleneck.
Exactly. Reuters reported that SK Hynix's valuation surged as HBM demand exploded alongside AI infrastructure expansion.
That is a huge structural change. Memory companies used to feel cyclical and commodity-like. Now, they are becoming strategic AI infrastructure suppliers.
Exactly. The market is no longer rewarding only who can compute fastest. It is rewarding whoever controls critical bottlenecks.
Which explains why TSMC keeps becoming even more important.
Right. NVIDIA, AMD, Broadcom, and others all depend on TSMC's advanced manufacturing capacity. Reuters recently reported that advanced AI-related production capacity at TSMC remains extremely tight because of overwhelming demand.
So, even if AI demand keeps exploding, supply can still be constrained by manufacturing bottlenecks.
Exactly. And then there is networking. As GPU clusters scale larger, moving data between chips efficiently becomes increasingly critical.
Because AI data centers are not just giant computers anymore, they are giant communication systems too.
That is a very important point. Modern AI increasingly depends on ultra-fast networking, low-latency communication, and optical interconnects.
So, where does this go from here? Does the AI rally continue?
That depends on whether AI infrastructure spending keeps translating into real profits. Right now, many investors still believe we are in the early stages. Reuters reported that institutional investors significantly increased holdings in semiconductor and AI infrastructure companies during early 2026.
So large investors still seem heavily committed to the AI theme.
Yes, but there is also growing concern about overinvestment. If too many data centers get built too quickly, returns could eventually weaken.
So even if AI itself is real, individual stock prices can still become disconnected from reality.
Exactly. AI demand, corporate earnings, and stock valuations are not the same thing.
So, saying AI is real does not automatically mean every AI stock is a good investment.
Right. Over time, the market will probably become more selective. Instead of rewarding anything related to AI, investors may increasingly focus on companies controlling critical infrastructure bottlenecks.
Meaning HBM suppliers, advanced manufacturing leaders, networking providers, and cooling and power infrastructure companies.
Exactly. The AI rally is evolving from a semiconductor boom into a full-scale infrastructure build-out.
Which means the real question is not which company uses AI, it is which company controls the bottlenecks that AI cannot function without.
That is probably the most important way to understand the AI market today.
Part 4. Summary.
Today we explored why AI and semiconductor stocks have surged so dramatically.
And the deeper we went, the less this looked like a normal tech rally.
What is happening now is bigger than a normal semiconductor cycle. Big tech companies are spending hundreds of billions of dollars building AI infrastructure.
And the market is reacting not only to AI models, but to the entire industrial ecosystem supporting them.
Exactly. That includes GPUs, HBM memory, advanced packaging, networking, cooling systems, and electricity infrastructure.
Which means AI is no longer just a software story, it is becoming an industrial infrastructure story.
That is why this rally feels so different from previous tech booms. But at the same time, overheating risks are very real.
So the important thing is separating AI as transformative from every AI stock is fairly valued.
Exactly. Long-term structural change can still coexist with short-term market excess.
And ultimately, the winners may not simply be AI companies, but companies controlling the bottlenecks AI cannot operate without.
That is one of the most important ways to understand today's AI market.
Thanks for watching today's video. See you next time.